Good morning, traders. Welcome to Elite Currency. Chris speaking here with another video on the euro dollar and pound dollar. Let's start with the pound dollar 1 hour chart. We got some interesting price action on both pairs. Pound dollar now making a pattern, I think a corrective pattern, which could easily be a wave 4. As you can see on the hourly chart, we're looking at probably a wave 1, 2, 3, up for 4, down potentially for a wave 5. So if that pattern breaks, if it breaks below this 134 level support zone, I think we could see a breakout to the downside and price might fall down to 133.50, perhaps even 133, and if it really extends further, even to the round quarter level of 132.50. But if it doesn't, or if it breaks above this resistance zone, specifically if we put the fib on the wave 3, important are the 38.2 and the 50 fibs. If price breaks above the 50 fib and therefore also breaking above the pattern, breaking above the resistance trend line, and specifically if it breaks above the bottom of wave 1, that would invalidate basically the wave 4 expected pattern. So anything above 134.50, 134.75, and we're looking at a potential bullish reversal to the upside, and this is not looking anymore like a bearish continuation. So that's a key decision zone for downtrend continuation or a bigger bullish reversal. And why would a reversal like that occur? Well, basically, if we take a look at the daily chart, and let me renew this template, you can see that price is probably finishing a 5 wave, and 133.80/134 did have a lot of Fibonacci targets at that area. So I was not surprised by the fact that price stopped right at that zone, 133.90, so right in smack in the middle of that zone. Didn't surprise me, but the reaction to that zone, at that zone, has been mild, and price is going sideways. So therefore, continuation is possible, because it would be like a second breakout. The daily candle reaction has been quite mild so far. We only see a little bit of a wick at the bottom. I don't think that is really a very big warning sign for a reversal. So I think the pound dollar downside pressure is looking stronger than the euro dollar. Euro dollar has a very interesting bullish candlestick pattern on the daily chart, in fact. But here too, just like the euro dollar, pound dollar, both are in a wave 5. It's just that the wave 5 and the pound dollar, it's probably a little bit more likely that that will continue to the downside. Here we had a diamond pattern like this, basically, and we broke that, hooked back, and continued. And that continuation still looks decently strong for the moment. Of course, it depends on today's daily candle too. If today's daily candle ends up bullish above 134.50, well then I don't think a continuation is likely. But a break below 134, 133.80, and yes, that does seem likely. There is divergence on the 4-hour chart. Of course, that does not have to take effect immediately. Divergence does not create a retracement right away. We are in a pretty strong channel, so as I said, at this moment, one more lower low is certainly not strange. But if price does break above that wave 4 invalidation level, which would be the 21 EMA, by the way, on the 4-hour chart, then a break above the 21 EMA, we could easily see, I think, a retracement. Of course, reversal trades are always riskier, but we could see a retracement trade up to the 144 EMA, and we could see price fill in, go into that space between the 21 EMA and the 144 EMA. And this is something that we explain in our SWOT course and SWOT method, and that the SWOT software shows. So if you're interested in that, of course, check out our website. But 21 EMA, I think, is crucial. Plus these broken bottoms here around 134.50, very key for the pound dollar. If it stays below it, let's see how far price can push, probably to the downside. Now, euro dollar, I think, is very interesting because it has a very key bullish daily candle pin bar, really, because it's been in a strong, very strong downtrend so far. And it looks like price is actually making a 5 wave, 1, 2, 3, 4, 5, like this. I think looks pretty clear to me. Now, whether the wave 5 is finished or not remains to be seen, of course, but a bullish candle like that is impressive, right? First of all, we have a support zone around 117, 117.50. So I'm not surprised by the bullish bounce in this area, right? So it makes sense. Second of all, the candle itself is looking like a good pin bar. First of all, a lot of bearish candles were before that. So some exhaustion to the downside is possible. Second of all, the candle itself is looking very strong. We have a daily candle close near the high. The daily candle close of yesterday was higher than 2 days ago. Plus, there's a big wick at the bottom. So, it looks like a good daily candle pattern here. There's plenty of space up to the 21 EMA. I think a retracement after 23 days back to the 21 EMA, it would not be strange. And a retracement back to the 23.6 fib, maybe the 38.2 fib, is certainly a possibility, and I think a decent target to aim for. That's around 119 and 120, as you can see. So let's take a look now at the 4-hour chart. Here we can see that it's still a little bit risky because euro dollar is making a bounce at the 21 EMA. The break of that 21 EMA and price would also break above that resistance. Not only the 21 EMA, but it would break above this resistance trend line. Let me draw that on the chart like this. And that could be, less risky than trading it right in here because, break above 118-ish would make the zone a little bit more clear and free of resistance. And I think that there's a bigger chance that price might make that upside. Otherwise, we're still in a downtrend, and one candle itself is, useful information, but not everything. Let's take a look at lower time frames, and we see that there is maybe a potential for a head and shoulders. Price would need to bounce at around 117.50 for that pattern to take place, and that could then be an extra clue that upside is taking place. We did break above the 21 EMA, as you can see. That's already the third time, so that's also increasing the chance of a reversal. So that's something to keep an eye on. But for the moment, waiting for confirmation, basically, for price to respond in this zone. And if it does, show bullish turnaround and breakout, then yes, maybe that reversal might take place. If not, and price starts to fall quickly here, shows a flag, and breaks that flag to the downside, then that daily candle might not hold, and price might just continue with this downtrend. So basically, downtrend in place. Price is at a strong support zone. It showed a strong candlestick pattern at that support, but still, price is continuing with this bearish momentum for the moment. So we'll have to see how price responds to this level, I think, in my view at least. And the safest way of trading is basically waiting for a break and a pattern, wait for a break and a pattern, and a re-break of those patterns, basically. That's always, I think, the safest way of trading continuations or reversals. Well, not reversals necessarily, but breakouts like this in this particular case. So we'll find out 2 days from now where we have a new update. More free analysis, of course, at elitecurrency.com. And you can also try out perhaps our ECS start package. That's for free. Got a lot of good tools there and a lot of useful info. Wish you all good trading. Check out elitecurrency.com. Also, if you're interested in SWOT, the software, the tools, the method, feel free to reach out and check out ecs.swot. Wish you all good trading. Cheers.